It is March 2nd, and this is, of course, the video log. It takes 30,000 to a million. And today I'm going to talk about Verizon and why I chose to go with this telecom company after searching for a telecom company to invest in for quite some time now. But first, let me take it real briefly through the account so you can see what's up. And then I want to talk about this choice. So I'm sitting at 143,700 about right now. And the biggest contributors to this over $6,000 gain today was Apple and EBIX. The EBIX play is I'm just going to stay patient on it and see what happens. I'm not exactly sure how it's going to turn out, but I'm going to hold for this thing until it gets up to 40, 50, or 60. I may lighten up the position a bit on the way, but I definitely have a ton of options, as you can see over here, that are based around this play. I was really looking to harvest some of that premium. So, as always, this is the ticker, the strike price, whether it's a put or a call, the expiration date, number of contracts, and whether it's a sell or a buy. I'm going to quickly scroll through all the positions. You can pause the video at any moment to try to figure out the exact positions that I have put on. The number on the right, the green or red, is the daily change in liability. I'm going to move into the stocks now. As you can see, this massive gain by Apple today. It was a very good day for Apple for sure. And I had a chance to accumulate some shares on the way down, making the move even more massive. ET had a nice day as well. And then I have emerging market bonds having a little bit of a gain. Other than that, EBIX had a decent day, erasing some of that liability on the option side. EPD, decent. Alibaba hovering. And then the newest addition to my account here, Verizon, which is the company that I'm going to be talking about today. Just real quick before I move into it, this is the account tab. I'm going to sort it by total return, just so you can see. You can pause the browser anytime, just like video on your browser or non-browser. I don't know how you play your videos. Maybe you play on the phone and just maximize the screen so you can look at my beautiful face. And this is the equity, sorted by equity, so you can see that Apple is my biggest position right now, followed by emerging market bonds, and then realty income, and EBIX, the newcomer, another newcomer. And then the rest of it is kind of dominated by energy stocks here. I have energy transfer, energy fuels, which is actually about to be selling out of my account if it stays above 250 for a bit longer. Verizon, Energy, etc. Alright, moving on now. Final look at the account here. This is the week performance. I'm actually up on the week, 1.67%. Very surprising. See how tomorrow goes. Down in the month, of course, because of the Apple slump and the EBIX shenanigans. So that's negative 4% almost. However, I somehow still managed to be up on a 3-month, up 7%. So not too far off the market. This is the year chart, of course, 61.5. So that's cool. Alright, so I got a lot to talk about, and I'm moving into the Verizon portion of the talk here. So I was looking at telecom companies to purchase. I was actually going to go in Malaysia and buy like TLK or something like that, because it's the only public traded company out of Malaysia, it seems like, really. But the thing is, I can't really play options on that, and I don't like the fact that it's such an unstable region when it comes to financial stuff. So I have no idea. I don't know where to even begin to do research on TLK or anything like that. So I went, of course, to something that's true and familiar to investors, which is the U.S. market. And so after looking at all the telecom companies, I decided to follow a well-known investor, or at least his company, and purchase a little bit of Verizon. Now, Verizon seems to be in the most well-positioned state from a profitability perspective for an investor out of the other two big names in the US, namely T-Mobile and at&t. Now, after looking through their numbers and the ratios, I have determined that Also, there are some other factors that are looked at, which I'm going to share with you right now. So I'm going to the browser. The first thing that I'm looking at is the FinViz, okay? Oops, misclicked something, don't worry about it. We're still on. Okay, so on the FinViz, this is the market cap right here, this number, the 234 billion. Then this is the income, almost 18 billion, and the sales revenue, which is 128 billion. Okay, that's book per share, cash per share, dividend. Dividend percent is 4.53 at the moment, which is very, very good considering the payout ratio is 57.5. So they're using, not even 60% of what they make to make this dividend payment, which is very attractive to me, okay? And 4.53 is way higher than you can get out of bonds and most other yielding instruments. And as far as consistency of this company and safety, I think it's very, very high. And I'll show you why in a minute. So financial health is pretty good. All the percentages on margins, the margins are great. Profit margin is 13.9%, which is fantastic. And ROA, ROE, ROI is alright. So I think this company is definitely a buy in my book. Obviously, it's not financial advice. You got to do your own due diligence and don't listen to people on YouTube when you're about to make a purchase. Everything that you own could go to zero. So don't, consult a financial professional if you're confused about anything. Okay, so another ratio that I'd like to look at, which not a lot of people like to look at, but I think it speaks to efficiency in the companies, is employees over market capitalization. So I want to have a firm that has accrued a ton of value for the least amount of employees possible. Not just because it shows efficiency, but also every single employee that you add into the company, I think, introduces a little bit of risk. And so the less employees you have, I think, as a company, you're going to have an edge in that department relative to others in the same business. And it just so turns out that this is about $1.8 million per employee market capitalization. So I really like that, especially if the company is profitable. And the price to earnings ratio currently sits at just under 13, forward PE under 11. So I'm pretty happy about those numbers as well. As far as growth prospect or anything like that, I'm going to move on to it right now. Here's some charts to look at, and the first thing that I want to look at is how the market share of postpaid phone market share is actually staying really consistent over the last 5-6 years. There's no 2020 data in this picture, but the trend definitely continued from this picture. You can see how Sprint and T-Mobile, which is now one company, is slowly eating away at the market share of the other two. But it's eating away out of AT&T a lot more. I mean, a lot more than Verizon. Okay, if you can see that. So T-Mobile would be a buy here, but when you look at the FinViz here, it's just overpriced at the moment. At least I personally think so. So I think that the symbol is TMUS. Let me see. We're gonna look it up real. Whoops, misclick. Sorry about that. Second misclick for today. So let's see if you can see the numbers. Yes, you can. Market cap 154, employees 75, so that's a good ratio. PE is at 48.84, which is very, very high. And forward PE is 34.88. Now, yes, this is the company that's eating market share and it's growing, but there's also a lot of drawbacks. Profit margin at the moment is only 4.5%. All these ROA, ROE, ROI is not that good according to FinViz here. It doesn't pay a dividend. It's just not something I personally want to invest in. That's all I got to say about that. And I don't even know what's going on with AT&T, because if you look at AT&T's numbers here, they're showing a loss for the current reporting. I just don't understand why. I'm just not in the know. So if you know why, if you could please like comment below and let me know why AT&T is losing money right now. Of course, they don't normally. I know that. 4P is about 8. So, and the dividend's pretty high, and I'm sure they can afford to pay that. So if you know the news, please let me know. But as it stands currently, they're sitting at a loss. After having sales of $171 billion, a market cap of $205 billion. The dividend 7.4%, which is great. But a little bit heavy on the employees, right? So they have twice the employees of Verizon and less of market cap. So I'm really not a fan. Really not a fan of AT&T here. Profit margin at the moment is of course negative. Of course. And all the numbers look bad because of this loss. I'm just not sure why the loss has happened. But anyways, so AT&T is definitely a no for many reasons. Not just because it's losing market share rapidly, but it's also not as good of a company, period. Excuse me, what the heck's going on here? This is what happens when you use free sites. It's just not as good of a company as Verizon. It loses customers. It's rated lower on reviews from review companies and users. So here's what I want to show you real quick is best phone carriers of 2021. Found a pretty popular article here, and T-Mobile sits at number 1, with the unlimited plan of $70 a month, and they have some other plans. And number 2 is Verizon, and I read over here and it said that it tested the best as the best performing network out of all of them. As far as market share goes, it's split about 40 to 30 to 30 right now, with Verizon being the largest, most widespread network and best performing one, and then 30% for AT&T and 30% for T-Mobile, now that it's swallowed up Sprint. And I'm actually currently with T-Mobile, but I like Verizon better. I might switch at some point. Probably not, for reasons I will not be discussing. Okay, now back to the charts. Some interesting things. This is churn. So basically churn is the rate at which a company loses customers each month. And Sprint had the highest. The other ones are pretty tightly grouped, so it's pretty irrelevant. But now the Sprint's part of T-Mobile, that's irrelevant as well. So the next chart is something pretty interesting to keep in mind. It's quarterly postpaid average, what was it? Average revenue per user. So you can see how the industry as a whole has reduced revenue per user over time because of competitiveness, because of competition. And so every single company has dropped. AT&T actually stands the highest right now. It's kind of sticky, but they're actually not as profitable as the other companies because they're just not as smoothly ran. You can see here that EBITDA for these companies, by the way, for those of you who don't know what that is, it's basically earnings before all the stuff you have to deduct, which is exactly interest, taxes, depreciation, amortization. You can see how Verizon is the highest. Okay, it's got the highest margins out of all the rest of the companies, and that's one of the big things that really attracted me because I'm looking for profitability, and I think this is a good bet when it comes to that. T-Mobile is actually the lowest. However, they're in this kind of growth stage, so I'm sure they're spending a lot of money on trying to grow and all that, and of course they acquired Sprint, so all kinds of things are going on in there. But I kind of like that Verizon is trying to run a lean ship, and I really like that. Okay, so that's what I want to show you here when it comes to these wireless companies and some of the little overview factors that made me swing this way, it's really, I think, the best bet to invest in the US, Verizon. So my entry price is around $56 at the moment, and I'm looking to accumulate. My position is actually pretty big. Let me see what it was. Let me exit out of these. Won't need them anymore. VZ is the symbol, if you were wondering. And I have almost $5,000, which is quite a bit, in Verizon. You can see my average entry price here. And I've also sold a put at 55. So if Verizon drops down to 55, then I will be buying 100 more shares, which is more than I have right now, by more than double what I have right now. I have 90. And I probably only sell calls against this position if it reaches, let's say, about $60. So if it goes up 20%, I'll probably start selling calls and looking to get an exit out of the position in a little bit. They are behind a little, by the way, Verizon is, when it comes to the 5G game, but I think they'll catch up, and I think that not a lot of people are going to care so much about that, as anticipated, and they're not going to care how fast they're adopting it. Plus, they still offer 5G right now. It's just not in as many cities as some of the other carriers, because that's their edge. I mean, they want to try to catch up with Verizon on market share, and I think they want to steal the customers by really expanding the 5G. If any of you is an expert on the wireless situation, I want you to comment on it. And by the way, if you're a really big expert by some odd chance, just come over here. We'll talk on a video, and you can explain to everybody how the situation. Maybe we'll do a little question and answer or interview or whatever. So just let me know if you know a lot about this topic and want to talk about it. I'd be happy to. Okay, I think I'm going to end it right there. Hopefully you're making more money than I am. I'm going to leave you all here for now. And with that said, peace out.